corroborating evidence is that crypto started going up, and many of these tokens have risen 100%
Mm-hmm.
in a week and a half or 2 weeks. Now, they broke these patterns where everybody was expecting another leg lower, much like they are in equities, which makes me slightly suspicious of equities, which I don't like being short. But crypto did really well. It's now overbought. We're putting in like DMARC 9 patterns, which tend to be a short-term correction. Now, do we go back to retest the lows based on the growth numbers and other stuff? I don't think so. I think we're more sideways consolidation than another rip higher, but it's not clear to me. But I think the base is in, and I've been saying that for a while now, because crypto is a very forward-looking asset, and it will look further ahead than anybody else, and it's sniffing out the change in bond yields. So that brings me on to the most important part, which is bond yields. Bond yields are now rolling over. As I've been forecasting, they're about to break a head and shoulders top pattern. So, Brian, if you can show the head and shoulders top pattern, which is this chart here, 275 in 10-year bond yields. If it breaks that, then we should start to go down below 2%. I think somewhere around 175. So that's not what the market expects. But if you think of what that does to growthy assets, it's taking down the future discount rate. And if that means that inflation is coming lower, then you're taking some of the inflation expectations out.
Hello and welcome to Money Talks. In today's video, crypto enthusiast and CEO of Real Vision and global macro investor Raoul updates about the most recent Bitcoin price rally that also uplifted Ethereum and other altcoins in the crypto industry. He talks about the changing narratives and how the shocking declines in growth will break the global economy. Raoul reveals whether the cryptocurrency markets have already bottomed out or not, and why Ethereum's triple halving event will be a giant boost in driving more attention towards crypto space. Make sure to stick around till the end of this video where Raoul shares his thoughts on the next phase of Bitcoin price movement and whether it will move higher or retest the previous lows. So without wasting any more time, let's dive right into the video.
Everything is coming into focus and it's really becoming crystal clear. I've been writing about this in Real Vision Pro Macro for months, saying, okay, this is where we're going. These things take time to play out. And these things mean, okay, the markets need to price in a collapsing growth, and the inflation story is going to change into a growth story, and it's going to pivot what markets do. So things like oil, which have been leaders, will not do as well. Commodities will get hit because of demand destruction, and we'll eventually see bonds rolling over, and probably more so oil. And as we see that trigger, we will see the kind of growthier end of the market starting to outperform. So that had been my base case for a while, and I've been counting it down and showing people. I've showed it on Twitter. I've been writing about it in depth and talking on Daily Briefing about it. And also on Real Vision, I've had some updates. But basically, it's now become clear from the forward-looking data, the Philly Fed and everything else is just showing it. But if you start to look at the really forward data, like the new orders component of all the regional Fed surveys, they're pricing things like ISM at 35. You know, these are shocking declines, which I've been trying to tell people about. Is economic growth over the next 3 months is going to shock people to the downside. And it's going to change everybody's narrative from, okay, we're in this sticky inflation environment, the supply constraints, to, oh my God, we've broken the economy. And I can see that globally happening as well. And so that's what I think we're setting up for. I think it's not next week, the week after is ISM. That's the big one for me, because I'm expecting ISM to either hit 50 or even go through it, which would kind of surprise people. But I think it goes below 40 in the next 2 to 3 months, which is not what people are expecting. And that changes how the markets are positioned. So the markets are very positioned, still short bonds and underweight bonds. People are massively underweight equities now, and they were and still are underweight crypto, and that's not the general public, but that is people like crypto hedge funds, massively underweight. Some of them have so much cash, and people are still overweight commodities. So, and the dollar's been the other key variable. I mean, there's a lot going on. This is a pure macro environment. I mean, it's all about macro right now.
Real Vision CEO Raoul Paul highlighted the recent gains in the crypto market, revealed his belief that the crypto market has formed a bottom. Is the low in? My view is on balance. Probably, Powell tweeted, sharing his opinion on the raging debate. NFTs are rising in ETH volumes and floor prices are rising too for good. Trusted projects. Bottoms in crypto are not usually a straight line higher, and there is often a big gut check at some point or sideways range for a few months after initial recovery. Let's see. It is worth noting that the crypto market showed significant strength this week. The entire crypto market has grown by 6%, pushing past the 1 trillion mark. Notably, Ethereum has managed to sustain its surge on Sunday and is currently sitting above 1400 price point, up 11% in the last 24 hours and 30.72% in the last 7 days.
So the dollar's been screaming higher. It's kind of stabilized a bit for now. It's not yet clear to me if the dollar moves another leg higher now or we correct a bit longer and then move higher. Don't know. I imagine if growth implodes, the dollar moves. The dollar is already pricing ISM around 45, so it's already pricing a full recession, but I think it's going to be bigger than that. So I think the rate of change in the dollar goes further. So that's still a wrecking ball, still to keep playing out over time. I think there's still washouts to come from the energy sector and others. Doesn't mean we go all the way back to the pre-COVID levels where many of the markets have got to, but we're going to retrace a lot more of that. My base case is that oil comes down somewhere between $80 and $60, to $80 and $60. The equity markets are somewhat more complicated because they're already pricing in. The S&P is pricing in ISM around 45, so there's a bit more room. The NASDAQ is around about 40, so it's pretty much priced in what I think is coming. My forward-looking indicators, which I'll show in a minute, will suggest that the bottom of the economic trough is like March next year. But I think stocks bottom first. So in 2018, they bottomed a year before the economy. In 1974, these are the parallels I've been using. It bottomed 3 months before. So it's somewhere between that. So I think they bottom in the next few months, or they have bottomed, which is contrary to what most people think. If they price in the ISM properly, there should be another leg lower, and that should be the final leg for me. So that's what I'm looking at.
Bitcoin as well has reclaimed the $22,000 price point. It is up 5% in the last 24 hours and 8.49% in the last 7 days. Matic continues its impressive run, up 27.07% in the last 24 hours and 65.5% in the last 7 days as the markets rally. It is worth noting that the crypto markets have remained in a rut for the last 8 months. Several digital assets, including Bitcoin, have plummeted more than 70% from their highs. The downturn has resulted from pressure from macroeconomic conditions that have led to economic tightening, leaving the market risk off.
Now, a lot of people had the narrative that this was driven by the halving. Now, maybe the halving, which is a reduction of supply every 4 years in Bitcoin, is a factor because it's correlated with liquidity. So what you're doing, you put more liquidity into the markets, it leads to more people able to allocate capital into a low supply environment, which is the halving. You don't need the halving as a necessary precursor. Ethereum's about to have a triple halving event. I'm going to do a whole update over the weekend. I'm going to film for Real Vision members about all of this. The macro, crypto, the ETH merge, ETH yields, why it all matters. But the point being is macro is the driver of everything. And once you understand that, you understand where the world should be going.
While Paul says the bottom has been formed, others like Lark Davis have called for caution in the markets. In a tweet on Monday, Davis warned that we are still in a bear market until macroeconomic conditions change.
So time horizon plus the volatility of the asset will set your position size, which is your risk. Right? So crypto, long duration, big volatility, smaller positions. So it fits within the risk tolerance that you have, and you can tweak those. But yes, we teach all of this kind of stuff, because all of these things need to be mapped together. I mean, one of the most incredible things I ever saw was when I asked Kyle Bass to interview John Burbank, so two really famous hedge fund managers. First question, Kyle, he just couldn't bleat it out fast enough, was, John, how do you size your positions? These things are hard questions. There's no simple answer. And we cover all of this too.
So do you agree with Raoul Pal that crypto markets have bottomed out yet? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thanks so much for watching.